Hey everybody, welcome back to Everything Money. We're glad you joined us again. As always, I'm Seth. I'm here with Paul and Mo, the sexy radio voice that I have. Paul, people yearn for this voice when I'm on vacation. They're very happy I'm back. And I'll be going on vacation again in August. And so you'll
Where are you going?
Utah.
What are you going to Utah for? It doesn't matter.
Yeah, I have been to Utah in the past, Paul, and I'm going back. I really love it. But today we're talking about, to hell with all that. Today we're talking about Sarepta Therapeutics. Sarepta Therapeutics is a biotech company focused on treating rare infectious and other diseases. Now, as you can probably see in my voice and hear, we have no damn clue what this company is. But the key is this company has fallen very hard this year. And Paul, I'm always interested when companies are high flyers, then they crash like this, down something like 50%. Is now a time to buy this company? What do they do? We're going to use our 8-pillar analysis
for a long time. Do you see this?
Yeah, I saw. We're going to use our 8-pillar analysis to see what's going on with this company. Are we interested in it? Because Paul, your girlfriend, Cathie Wood of ARK Invest, she loves this company, and so let's see.
Do you see this? This is from 1997.
Go ahead.
I mean, this is incredible. Look at that.
And
look at
then
this.
Down. It's all
look
over
at that.
the place.
Look at this. And all the while,
let's
see it's. So, guys, this is a $5 billion company that has $573 million in revenue and lost $700 million last year. So,
time to buy?
Maybe. So, guys, the thing is, I immediately see this company and say the 8 pillars aren't going to matter. Immediately. And why? Because this is it even says at the bottom here, most of Sarepta's product candidates are at an early stage of development. So there's a lot of potential there. Now, one thing I want to look at is how are they funding that development? My guess is issuing a lot of shares. And I was correct.
Okay.
10 years ago, they had 22 million shares outstanding. Today, they have 80 million shares outstanding.
Oh my gosh.
They've almost quadrupled the number of shares outstanding. Let me explain to you how bad that is and my friend Cathie Wood and how dumb she is for not understanding this.
Uh-oh.
Let's say a company has $10 in profit and 10 shares outstanding. Okay? Each share gets $1 of profit, right?
Yes. But now there's 4 times as many shares, Paul.
Now, what they did was they're like, oh, we're going to make it 40 shares. That same $10 in profit now split 40 ways.
You get a quarter.
You get 25 cents. You got diluted. Now, is this bad? Listen, they're issuing shares. Here's my point. When a company's issuing shares, they're basically acknowledging our stock is overpriced. So you want them issuing shares versus taking dead on, correct?
Yeah,
if I look at this saying, this is let's go look at their revenue over the last, so their revenue here. Let's go even further back. Oh my Lord. 100,000 in 1997, 900,000 in 2002, 44 million in 2012, wow. 574. Great. Now, there's obviously growth here in revenue, big time. Look what happened here, though. Oh my God, look at this inconsistent. Like, to me, guys, I'm looking at going, let's go look at their profit. Oh my Lordy. And the losses just keep tallying up and tallying up and tallying up. What's their retained?
So normally people would argue this is a young growth stock, but this company's been around a long while and they're still hemorrhaging money, Paul?
I mean, they have $3 billion in losses accumulated. I mean, listen, guys, free cash flow. Let's just skip right to free cash flow.
Okay.
Negative 800, 260, negative 560, negative 200, negative 250, negative 170, negative 165. So does this mean you shouldn't buy the company? No, they're making the argument of it's a growth company. It's got a lot of potential. So what we have the stock analyzer tool. So what I can do is I can put all my revenue assumptions, profit assumptions, et cetera, into the stock analyzer tool and say, hey, how does this company look in the future if it does hit its numbers? The problem we have is, look at the share change. They're averaging, the last 10 years, they've increased the number of shares by 15% a year. 15% per year. They are diluting the heck out of every investor out there.
Now, I ask you all the time, Paul, and maybe this is a moment where you can clarify for me. It's like, I don't get a piece of the income they're getting.
Yes, you do.
Tell me
guys,
how.
Let me draw this analogy here. This is something we have to make a separate video for.
Please do.
So everybody always says, yeah, the free cash flow comes in, but how do I get it? Let me give you an example. Let's say you have a company A, and let's assume it has 0 debt and just a bank account. And every year it makes $10 in free cash flow. After year 1, how much is in the bank account?
10.
Year 2, how much is in the bank account?
20.
Year 3, how much is in the bank account?
30.
Year 4, 40.
Go
and year
on.
5, 50 bucks.
This is the math I can do, Paul. This is good.
Right? So at the end of year 5, it's still making $10 a year and it has $50 in cash in its account and no debt. So you can essentially sit there and say, well, they might just give a one-time dividend and say, hey, we have all this cash, we're gonna give it to everybody. Or you might sit there and say, as an investor, wait, I can buy a company that's making, how much would you pay for a company that makes $10 every single year and it has $50 in its bank account today? How much do you pay for it? 100? I'd be like, well, wait a second. If I pay 100, I'm getting, it's backed by $50 in the bank account tomorrow. Mm-hmm. And eventually they gotta do something with the cash. What are they gonna do with the cash? Issue a one-time dividend. Buy back shares.
Buy a new company with it?
Buy another company, increase its revenue, increase its profit. You get it in some, it's gonna either increase the cash flow of the company, which you want, or it's gonna be issued to you as a dividend, or they're gonna buy so many shares back that eventually there's a very few owners and you're getting a bigger and bigger piece of the company. Stop looking at a stock as just this ticker symbol that keeps going up and down. I don't get that cash flow. Yes, but if you invested in my company, if you invested in everything money, and we had a bank account and just kept growing and growing and growing, and you knew you had rights to that bank account, what's the difference? There's no difference. You might sit there and say, yeah, but I don't get that, I can't decide what I'm doing with it. Put your ego aside. It's not about that. It's about sitting there and finding companies that people can sit there, the company, you believe the company heads can invest the money at higher rates of return and do better with the cash. If you don't believe that, don't buy the company. But you'll eventually see this cash in some way. Because guess what? There'll be pressure from people on the investors to sit there and do something with $50. Hey, what are you guys doing with that cash? Give it to us then. Let us have our money. Because if I paid, let's say I paid $100 for the stock in year 1, I can now get $50 of that back in year 5. Isn't that pretty awesome? That's how you get your money back. With a company like Sarepta, I don't even know the name. With a company like this, it's just accumulating loss after loss after loss. Does that mean it's not going to gain and not going to be worth something? No, but at some point you have to see some sort of turnaround, but it keeps losing more and more money every single year.
Wouldn't you imagine, Mo, that normal people like myself, maybe some of you viewing, would just see, well, it used to be this high. It's now really low, so I should probably just buy this, Paul, because it's going to go back up, right? Don't they all just go up most of?
Yeah, but it's pharma, though. You have to understand the pipeline, too.
Oh,
and if you start digging into this, it's Duchenne's muscular dystrophy, so there's no cure for it. They have drugs that probably what they're generating revenue from is their 3 drugs that are commercial. They're generating their treatments for it, but it's not like Duchenne's is really, it's a tough area to be in, and that's where they are. So I'm staying away from it.
I can see the trading chart behind you.
Yeah.
It's well below your 32% stochastic there.
So really, to me, I wouldn't even trade something like this, but what I want to teach you about is this right here. This massive drop one day. This happened after market hours and just fell and just opened down here. So this is called a breakaway pattern. What a breakaway pattern is you have a big fall like this and a huge gap, and then you have, this is all just resistance that is just pushing down on you. So the people that were up here, they're saying if I can get 50% of my money back, I'm going to exit the position. So the stock price will come up a little bit and then it'll fall back down, and then it'll just keep falling down. And eventually this is going to get to the point where the stock price comes up and it comes back down. It comes up and it comes back down. And it just can't get through that halfway, because these people back here are saying, just give me half my money back and I'm gone. So that's the real problem with these breakaway patterns. It takes a very long time, and the space that they're in is very expensive to research. And frankly, it's like Alzheimer's. It's like the Biogen we just did. Mm-hmm. There's not something out there that's concrete that's a very effective treatment / cure, unfortunately. So it just is what it is.
Paul, do you want to do the stock analyzer tool on this
Yep.
puppy?
So here's what I want to show people. Remember, guys, look at this income statement. They are losing money. Every single year, they lose more and more money. The stock analyzer tool is not allowing me to do that. It is assuming it starts making money today. So we can all agree that's a little aggressive, because they're already on the path of losing money like crazy,
Every year, yeah.
Every single year, and it's getting worse and worse and worse as the years go on, okay? The stock analyzer tool is assuming revenue growth of between 20 and 40% a year for the next 7 years. Okay, so let's do 40% a year. 1.4 to the power of 7 times 550 million they did last year. It makes them a $5.8 billion revenue company in 7 years, okay? Buying back shares, they're issuing 10% and I'm assuming they keep the same in the best situation. All these assumptions are here, assuming profit happens today. Look at it. There's only one area, the highest assumptions, where it's a great deal if you can assume these things. But I don't think any of these assumptions are reasonable. Mm-hmm. That's the problem. So I look at it saying, Is it possible that this is a great value right now? Sure, it's possible. Is it probable? I don't know. If you're excited by fast growth opportunities, you still have to fundamentally understand the company and how they're going to get those fast growing opportunities. They're still diluting the heck out of every single owner out there. In the last 10 years, they've quadrupled the number of shares they have outstanding. So I'm making an assumption over 7 years that they don't issue any more shares over the next 7 years. That's quite the assumption when in the last 7 years, they've done how much, right? I just look at it going, geez, oh, Pete, is it possible it ends up being a home run? Yes. Is it probable? Your job in investing is you're a statistician. Are the odds in my favor better than odds against me? That is the point. That's it.
Did Cathie Wood say why she's interested in this, or why she bought a lot of this? Does anybody know? I just want to know. What is the absurd rationale that this woman thinks?
You know, it's funny. People like her make fun of value investing and then use value investing to justify. So Cathie, is it IE? Cathie Wood, Sarepta.
Yeah, there it is.
Sorry. Let's see what her comments are. Are there any comments?
It's just crazy to me that they're hedging everything on, like, to me, this goes back to, like, what was that, Clover or something?
Yes.
Or the other BINGO or something we did?
Yes, biogenomics.
It's the same thing, and everybody got so mad about that one. But this, like, I like what the company's doing as far as what the disease they're researching, but God, be realistic. Spread yourself out a little bit. Like, you're going after one extremely difficult area to treat, and the big companies struggle to do this, let alone something like this.
What do you find, Paul?
I'm not seeing any comments from her.
It is funny how we'll look at a stock that maybe Michael Burry buys, and you look at the balance sheet and you find this anomaly. It's like, oh, this is why he did it.
Yeah.
But with her, it's just kind of
never find it.
all over
Well,
the
it's
place.
hype. That's the thing about hype. It's just her business is all about hype. Her ETF is all about hype. 17 of her top 20 holdings lose money. I mean, guys, when you're paying tens of billions of dollars to own money-losing ventures, it doesn't take many for them to fail for you to end up having a really hard time. Really, really hard time.
Yeah, and the reason we bust up Cathie Wood is because we catch you as a viewer after you watch all those other videos and lose money. Then they come to us and finally say, oh, this speaks to us. So if this speaks to you, the numbers, the math, the discipline of looking at the actual financial data behind a ticker symbol, you can join our Patreon below. Over 4,000 members, Paul. It's incredible. And you get access to the software. You get access to the three of us. You get exclusive
Can we tell them about the
videos.
software stuff?
We did not, Paul. Go
Can
ahead.
we?
Oh, please do.
So look at the software, guys. It started at 8, and I'm a big believer in building value. It's going to 49. So get in now. You're locked in at the price you buy it for. You get the mobile app, 8 pillars, 30 years of financial data, stock analyzer tool, daily content exclusive to you, not on YouTube, access to us, real estate calculator, stock screener, retirement calculator, the Discord community, 4,000 people like you talking
All
about
over
investments
the world.
every single day.
Latvia, New Zealand,
So many.
Korea.
And they talk about everything. They even talk about crypto in there. Like, of
Yes.
course. So anyway, 200 a month, 200 a month, 35 a month. Ours is 25. You get all of these. You don't get any of those. Question. What are you doing?
Yeah, and if you
80 cents a day.
If you're wondering, you can look at our Patreon count versus subscriber count, and it's astronomical compared to other people. It's because we provide so much value to our patrons, and we love you. So that's our take on Sarepta Therapeutics. Obviously, a huge avoid on our part as value investors, but we'll keep you updated if this thing falls even more. I'm guessing with this zero free cash flow over the past 10 years, 1 year of free cash flow, we'll probably not going to be buying this company anytime soon, Paul. So.
Listen, I just don't see the story to it. I mean, I bought CCL. They've had lack of free cash flow in the last year, and I just look at it saying, guys, you have to have a story. You have to have a reasonable story as to why the company will start making money suddenly. I look at this going, boy, it's been around for 20-some years. They've never they've barely made a profit. They have a total loss over the last 20. It's just a hard thing to do. It's just hard for me to get my head around that.
And of course, Paul, when I go to YouTube and I just typed in this stock, and of course, this stock can explode. This is here's another one. This is 9 months ago. Biotech analyst discusses her top picks. Everyone's saying, here we go, huge pharma. This is 6 months ago. There's not a single video that says, wait a minute here. Maybe we should pump the brakes. They're all just,
hyping. Why are they hyping, though? They're hyping because they need to sell views.
This stock will go crazy. Of course
we have 8-9 businesses upstairs. We do this because we enjoy this. We tell you exactly what we believe, not what you want to hear, so that you buy stuff from us. Do we have software? Absolutely. Does everybody who buys the software agree with us and everything? Absolutely not. But our goal is to sit here and provide financial learning, financial teaching, so you can make a decision based on fundamentals and how you approach it. But there are many ways to skin the cat, even in value investing. I'm just showing my way, but hopefully it opens your eyes to other ways of value investing. But Sarepta is not a value play, in my opinion.
That's our take. Fondle the thumbs up, and we'll see you in the next video. Thanks for watching.